Previously on Dry Powder, I asked Bain's leading experts on tech due diligence, Asit, Goel, and Chen, to describe what a robust approach to technology due diligence actually looks like.
As we map out these questions that are truly relevant to the deal, we make sure that our clients understand what could the potential range of answers be and how would that impact the deal.
Our clients are learning that the technology side of the business is not just a set of tick boxes that they need to perform in order to get the investment committee to say yes. It's really an integral way to think about how to create value in a business and also help inform the value creation plan that's going to be required to generate the returns that investors expect. One of the critical factors for success here is taking technical speak and turning it into business speak. So it's not simply bits and bytes, it's actually dollars and cents.
Part of our secret sauce is really putting on the investor lens. It's insufficient for us just to understand the ins and outs of technology.
Today on Dry Powder, Hank and Asit will show us how leading private equity firms translate the insights into actionable recommendations for the deal team. I'm Hugh MacArthur, head of Bain's Global Private Equity Practice, and this is Dry Powder. Once you actually have the target company, you made the purchase, you closed the deal, how do you connect what you're seeing back to the deal thesis?
If you're having an ongoing dialogue with your client before you even scope the engagement, before the project kicks off, it's really easy because you have clarity on the key questions that the deal team is trying to crack and what they want to bring back to the IC. And so in one of our recent projects, it was really all about tech disruption risk in the machine translation space. We put a lot of thinking into which types of futuristic technologies were most likely to come to fruition sooner than later and qualify the risk in the context of the target's business profile. And that provided the IC with a lot of comfort that this was a risk they could underwrite. And so really for us, again, it starts with a conversation even before the project begins. Hey, what are your key questions? What's important to the investment committee? And let us just focus on that and bottom those out for you, together with some of the commercial questions.
So you've talked about a lot of sectors where tech due diligence is relevant, Hank, everything from the classic SaaS-based, software industry kind of thing down to forklifts and things that are very, very basic. I would imagine that the range of technological expertise across deal teams varies tremendously depending upon what industry we're talking about, what GP we're talking about, what situation we're talking about. How do you make sure that when you give them advice, it's actionable recommendations that the deal team can actually process, especially when so many of the technical details could actually get lost in translation? I know I'd be lost in translation.
Yeah, that's a really great question, Hugh. I think part of our secret sauce is really putting on the investor lens. We can summarize the technical findings in a way that investors really can grasp and understand, in our next holding period, what are the things that we need to do to take this company to the next level? What are the pieces of technology that require investment? But more importantly, what that means in terms of their investment going forward.
The example that comes to my mind is the telecom company asset that we were looking at. And Hugh, on this one, this was the sell side that was positioning this as a very structured asset. And, typically what we see a tech diligence company do is they'll come in and they look at the product and they would come up with insights like, here's a checklist of all the different software languages they're using to write the code. Here's the list of their people. The talent is good, bad, not so good. Where do you have gaps? Any private equity company would look at that and say, okay, God, sounds generally okay. We looked at that and say, wait a minute, problem is, because this software has been pulled together with so many different languages, getting that talent and retaining that talent is a key area. Without that, you're going to run into trouble. Then as we started looking at the talent, we not only looked at who's the talent and where they are, we looked at what's the talent turnover. And it turns out, yes, the turnover was super high because it's such a fragmented code. And every time there's a turnover, there's a huge risk they open themselves up to because you're looking for that niche program. And so tying it all the way back to the investment thesis and what is the so what, because of all the findings, this is where our clients were seeing a lot of gap. And this is where we are able to bring our traditional Bain DNA as well as our tech diligence DNA together to make it actually impactful to the thesis.
So are these so what conversations, are they really focused on finding the bombs, finding the threats in an investment thesis or a deal, or do they also reveal any growth or value creation opportunities?
Both, for sure.
Can you give an example of how the tech due diligence can reveal commercial opportunities that the deal team might have never even expected?
Yeah, Hugh, this happens all the time because of that bird's eye view that we occupy. We recently diligenced a student loan platform in the fintech space. And the thought occurred to us that similar technologies could be employed to offer instant loans to students. And this happens to be a very hot space in some emerging markets that we've had occasion to think about a little bit in the past. So once again, we're able to kind of try to help connect the dots and bring that back together. During the conversation with management, we discovered that the team had never really considered this type of application, but this is one example of the type of value we could bring back to both the management team and to the deal team.
And how do the leading firms, Hank, tie this tech due diligence into commercial due diligence to make it more integrated?
Yeah, it's really important to think about the growth aspects of a deal opportunity. The analogy that always comes to my mind, Hugh, is the home buying process. If commercial diligence is building understanding of whether home prices are likely to increase in a particular area, how strong the local school systems are, and the quality of the neighborhood, then technology diligence is actually going in the home to inspect the underlying systems. But it's not just doing that with a risk perspective, but it's really important to understand what the growth opportunities are. So sure, it's important to understand whether the roof needs replacement or the water tank is nearly shot, but more important to know that you have the electricals in place to build that new addition you want to have.
So for many different types of investments, this sounds like the tech due diligence and the commercial due diligence come together to really inform a unified value creation plan. So we're really moving away, very far away from tick boxes, and we're moving away from just talking about bits and bytes, and we're really talking about dollars and cents and actions needed to both prevent potential problems, but also exploit new opportunities.
Absolutely. I had a conversation with an operating executive recently where he acknowledged this is a challenge at his firm. And part of it is a way that we've historically run diligences, right? And so it's really incumbent on the Bain team to really tie the learnings in the diligence phase in a holistic manner for our clients going forward so that they can really understand how to think through what their learnings and bring that into the value creation phase.
And as you know, Hank and Asit, our clients are varied and they're structured in many different ways. And sometimes the ops team is not really as involved in the diligence phase. They get involved after that. In those types of instances and those types of organizations, how do you ensure that the insights that we're getting in the diligence phase actually make it to the ops team so that they can go about executing on a value creation plan and potentially even creating one?
I think, Hugh, this is an evolving area of opportunity. If the sponsor has separate deal and operations teams, we work very hard to make sure that both stakeholders are involved in the due diligence process. Often there's also a third-party advisor that's in the mix, portfolio company CTOs or other outside advisors that are friends of the firm. We work hand in glove with them all the time, but of course, we want to make ourselves available to the operating or management teams after the deal closes. Interestingly enough, there's still many sponsors out there who don't have that type of setup today. And so we're working directly with the deal team and any outside advisors on those sorts of handoffs.
Yeah, I would say exactly right. Our overall preference is always to have the operations teams involved sooner than later. But, we operate the way our clients are structured and the way they would like to operate on this matter. So Hugh, a question for you. How would you rate the importance of tech diligence to Bain overall, but also specifically to our private equity practice, and why?
Well, Asit, as you know, our business is speed to insight for clients, and whatever provides more insight faster to help them make smarter investment decisions, we have to be all over. So tech due diligence is an absolutely critical capability that Bain have in its toolkit because, as Hank mentioned earlier, software is becoming more and more germane to more and more deals. Not only is software the single largest subsector in the buyout industry, representing about 25% of all deals, but when you look at software-enabled opportunities across other industry sectors, I'd argue that well over 50% of all deals in the buyout sector actually involved and are critically dependent upon software. Software might be the end product or it may be an enabler, but our ability to look at it from both a commercial perspective as well as a technology perspective is absolutely crucial to bring the best of Bain to our clients.
Hugh, I'm really curious, if we use the evolution of commercial due diligence as a historic parallel, where are we today? What inning are we in the ball game? And how do you see tech diligence evolving in the years ahead?
Hank, it's a great question. I think we're in inning one, maybe the bottom of the first inning when it comes to technology due diligence and its evolution. There are still many, many firms out there that use no one or that use a single mom and pop shop that maybe can't do the full suite of robust activities that are required to really deliver value and actually prevent the erosion of value in certain instances. So I think there's an awareness issue out there in the marketplace. And beyond the awareness issue, I think there's a lack of understanding in many places about what good truly looks like versus what okay or actually even not so good looks like. So I think there's a lot of room to evolve. And as we all know, software is eating the world. And I think software is going to penetrate only more deeply into other segments, as well as remain the largest or one of the largest segment on its own as a product in the private equity space. So investors are really going to have to up their ballgame in technological due diligence, and we're here to help them do that.
I agree with you. We are definitely in the first innings of this. I also think that there's a talent evolution that is happening right now. Quite honestly, finding the right mix of talent that knows how to do world-class consulting, work with private equity, have the deal thesis mindset, owner mindset, and technical jobs. That's not an easy talent today to find. And that's why we've spent a lot of our effort finding the talent and bringing the talent in. I think there's an evolution of this, even on the talent side, that is, again, in early innings, and it'll grow and we'll see a larger talent pool emerge from it.
Asit, Hank, I really wanted to thank you for coming by the show today. It's very clear that something exciting and something new is happening in technology due diligence, and people in the private equity industry really need to become more aware of it and understand how to use it. And I thought today's discussion was terrific. If you can make an old analog consultant like me understand technological due diligence, then I think we hopefully reached a lot of listeners today, and they're more excited about it as well. Thanks again.
Thank you. It was a pleasure to be here.
Thank you, Hugh. It was an honor.
If you'd like to take a deeper dive into the team of tech due diligence experts here at Bain, click on the link in the episode notes. I'm Hugh MacArthur. Thank you for listening.